Hello, I'm Helen Daly. Welcome to Business View, where we gather some of the best brains in business journalism and they give us their take on the week's top stories. It was another very busy week in business news. Amongst the big stories, we saw the ACCC's ruling on the NAB-AXA deal. We saw a corruption and bribery scandal related to BHP Billiton and the Goldman Sachs charges which rocked global markets. And joining me to discuss all this in detail, I have Cynthia Coons from Dow Jones Newswires, Adam Schwab from crikey.com.au and Stephen Mayne from the Mayne Report and Fairfax's Business Day in Melbourne. Welcome to you all. Now, if we could start off with the NAB-AXA deal. Now, the ACCC said, no way, we have some concerns over the lessening of competition in the platform market. Did you expect that to happen, Adam? I mean, they had given indications, hadn't they, that they had concerns about it?
They had certainly made noises about it, but I think the reasons that they gave were certainly a surprise to most. The retail platform reason is essentially that the main excuse given by the ACCC was a strange one. Arguably, it's a small part of the business. In a sense, AXA and NAB were being penalised for being too fast moving, whereas AMP didn't have such a retail platform. NAB picked it up in the Aviva deal last year. So they were always being penalised for their own ingenuity, so to speak.
Yeah. Cynthia, what did you make of the decision? Do you think this is Graham Samuel flexing his muscles?
Well, it does appear that way, and there have been a few deals that have been rejected lately.
Interesting. I mean, there's been quite a war of words about this, because what did you make of NAB? They came out very bluntly and said, you know, basically we do not accept this decision, and we think the basis on which the ACCC based the decision is incorrect.
You can feel some sympathy for NAB's position. It's almost a case of if you're watching a football game and an umpire gives a wrong decision and a minute later they give the same decision to the same team, people call it a square-up. It's almost like the ACCC's done a bit of a square-up here. As Stephen said, the St George, Westpac and the CBA Bankwest deal should never have gone through, and Samuel seems to have all but admitted that now. So this almost seems to be a square-up, and NAB seems to be the victim that they know they've over-concentrated the banking sector. We've got all four banks are clearly too big to fail in this country. I don't think anybody would dispute that. The deposit guarantees have proved that. So I've got four extremely dominant banks, and Samuel must have just gone, well, we can't let them take another plank away. And as Steve said, the fifth pillar argument is certainly one that no doubt is on the ACCC's mind. And what I gleaned from their reasoning is they wouldn't object to an AMP AXA hookup, especially given the reasoning of the retail platform clearly left the door open for AMP, which certainly hasn't got those issues. No,
but it was also interesting, this kind of war of words, I guess. Graham Samuel kind of accusing NAB of failing to perhaps alter the bid after its initial concerns were raised, and then NAB effectively saying, well, that's a load of tosh, and NAB reckons that it told the Commission that it was prepared to offload some assets to get this deal through, and the Commission says, well, we didn't hear that. So it's quite interesting that this is being played out in the pages of the newspaper.
It is, and there's nothing to stop NAB from entering into an agreement now with the ACCC. It can happen subsequent as it can happen precedent. So I wouldn't say the door's shut for NAB, but it certainly doesn't help them at this stage. But they're going to have to obviously change their strategy and get the ACCC on side, because they've clearly proven they will step in.
Yeah. Billiton. Now, the corruption and bribery, I suppose, you know, it admitted, although it was a bit buried, that it had uncovered evidence of improper dealings with overseas government officials. Now, they said the probe related to certain terminated minerals exploration projects, but they ruled out that it was China, and they ruled out that it had anything to do with BHP's marketing. So, do we know much about this, Adam?
There's been a fair bit of press this morning about it, that Cambodia appears to be the speculated culprit. And
Philippines was also mentioned, though, in dispatches.
It was.
Both had mines that they explored and then they've been terminated.
Exactly. I guess the question lies here in how often does this happen? Is this obviously we've seen Rio, we've seen BHP now, alleged, obviously. Is it a precursor to doing business in a third world country or a developing country that these kind of monies are needing to be paid, and how hard should we be on BHP? Possibly very hard, but possibly we need to look at it. If BHP isn't doing this, will they lose opportunities in those developing markets? And Cambodia obviously is believed to be a very much excellent market to be developed by the developed world. So we don't really know enough at this stage to know what's happened. There's allegations that are saying the similar person who was involved in the BHP, AWB, Iraq scandal there could be involved, who's a descendant of a former Prime Minister.
No,
so
it's not the first time for BHP, is it? But Stephen, to move on, do you think this is perhaps something to do with the new Broome chairman, Jack Nasser, coming in just recently, wanting to clear the decks, get all this out in the open? I
think it's more an SEC pushed issue. It's interesting, Jack Nasser, when he was CEO of Ford, had issues of his own towards the end with the Explorer Firestone tyre problems they had there, and he didn't disclose it quick enough. So perhaps he's learned his lesson back in 2001 when he was effectively pushed out by Clay Ford as CEO of Ford. And it certainly wasn't a fantastic departure. He had a great start to his executive CEO career there, but it wasn't a great end. The share price slipping and the lawsuits regarding that. So perhaps it is, but I suspect it's more an SEC pushed thing, and there was a UK-based corporate watchdog who I think may have brought it to the light of the SEC. They've certainly claimed credit for it. So I think it's more timing than anything else.
Yeah, Cynthia, the RBA minutes, Adam, came out this week, and you know, they seem to be warning of further rate rises as we approach this normal level and return to more normal levels. But do you think it's going to continue next month or in June?
It's a tough question for the RBA. If you look at the world economy, a lot of people, myself included, don't think it's out of the woods. Obviously, you've got the Greek situation, which is certainly not improving. Their spreads have gotten worse in recent days. The German Parliament still has to pass their share of the bailout package, so to speak. So,
well, the IMF's getting heavily involved in that potential bailout
certainly
too.
Certainly, they've got issues in Portugal. You've still got issues in the rest of the pigs, Ireland, Spain, Italy. So the overseas situation certainly isn't a great indicator. The US had good job figures, but if you look deeply into them, arguably the 167,000 jobs created in March weren't really a fantastic underlying result if you look at the way they manipulate the figures.
So you think all that could still bring down the momentum that has gathered in the rest of the world?
Looking specifically at Australia, largely Australia's economy has done so well on the back of a buoyant commodities sector and an unbelievable run of property prices. And the question is, about half of our debt that underlies our property boom is sourced from overseas. If the overseas economy stalls, our property market stalls, and suddenly the Australian economy isn't as bright as perhaps some people think it is. So going back to the original question, for the RBA to increase rates, it'll stop the property bubble from inflating, but it does create that back-end risk that if the world economy slows, double dips, passes on to Australia, there is that risk of what happened in the early 90s when you're contracting the money base and you've got your growth dipping as well.
Yeah. Stephen, man, it's interesting that, Adam.
Don't disagree with what Stephen's saying. Just one thing that did come out during the week was Jeremy Grantham, who's a hedge fund manager in the UK. I think GMH is his fund, very well regarded fund manager, and his research indicated there's been 34 bubbles that he could identify, I think possibly in the last couple of centuries, and there's only two that hadn't yet burst, and those two were the Australian and the British housing bubbles. So that's certainly a factor that will need to be considered. Whether the RBA are trying to slowly deflate the bubble by the interest rate increases, it certainly...
Well, I think that's been clear from some of their statements, hasn't it, that they're a little bit concerned about a housing bubble here.